Okay, live on YouTube. Things are looking good. Things are looking good. We're now live on TikTok. Awesome. Awesome. Good start to the day. Good start to the day. Pretty interesting stuff. Today's obviously the most interesting thing going on with the stock market today is we've got NVIDIA earnings at 5 p.m. Eastern. It's down 1.5% heading into earnings. And what appears to be or what's gearing up to be a pretty interesting day with respect to what's going on in the markets. Lots of exciting things, lots of interesting things that are going to end up happening. Now, with respect to NVIDIA and with respect to the second quarter results, I believe we're looking for somewhere around $2.38 per share in earnings. That's probably going to be in line with expectations. I'd imagine they'd probably see somewhere around $2.38 per share. And revenue is expected to be around $92 billion. I'm sorry, not $2.38, about $2.10, $2.09 per share in earnings. So that's going to be pretty interesting to see. It's going to be pretty big as far as implications for the rest of the market. Now, with some other companies that are involved in the AI supply chain, some other companies that are expected to have impact or be impacted as a result of this, we can look at something like SanDisk or something in memory. SanDisk is up 1.3% on the day, just about $1,500 per share. And we can go look at something like Micron. In Micron, I'd imagine we're at about $940 per share. Things seem relatively calm before the storm, so to speak. This is the calm before the storm, and before things get a little bit crazy with NVIDIA earnings this afternoon at 5 p.m. Eastern. So we're expected to see about $92 billion, $92.2 billion in revenue with $2.10 per share in adjusted EPS. What are my thoughts on NVIDIA? I think we're probably going to see some interesting movement with respect to NVIDIA's price like we've already seen so far, but I'd imagine that we're probably going to see a revenue and a slight earnings beat for NVIDIA. Is it right after market close? No, it's an hour after. So market closes in about 20 minutes. It's at 5 p.m. is when we're going to find out what NVIDIA earnings are. Now, this is kind of big because what NVIDIA ends up reporting and what its management's guidance ends up saying about what the future looks like for the stock is going to have pretty big implications with the rest of the market. Am I crazy to short NVIDIA? Honestly, I don't think we're going to see huge movement with NVIDIA. I wouldn't imagine, like, if we close where it currently is, about $210 a share, it may come down another percent, maybe 150 basis points. So no, it's not crazy to short it, but as far as getting a swing trade going into tomorrow morning, it depends. I don't think we're going to see a huge movement in the stock's price. When's the call? It's at 5 p.m. Eastern today. And we're going to live stream it. And we're also going to get live reactions out of me with respect to what the management says. It's going to be pretty interesting stuff. Now, as far as the supply chain for AI and other companies involved with it, things seem relatively calm for now. Like Applied Materials is about flat for the day. We just looked at Micron. We can go look at Broadcom right now, and I think Broadcom is actually, down about 1%. So things seem relatively calm, and definitely, I think everybody involved in this, or everybody who's in here is, or at least everybody who's related to NVIDIA's supply chain and in the AI business right now, are kind of biding their time, waiting for things and seeing what's going to end up happening. Are we buying? I am not currently in. I'm not currently in NVIDIA. I'm not buying shares going into earnings. I'm not selling shares if I hold them going into earnings. I'm just hanging out, biding my time, seeing what's going to end up happening. How many hours to the call? It's in about an hour and 15 minutes. An hour and 15 minutes. So yeah. Guy, with respect to Rocket Lab, do I like Rocket Lab as a stock? Honestly, I don't love it. There's a lot of execution risk associated with this company, and I'm really, really not a huge fan. This guy's a talker. I hate talkers. They make me thirsty. Love the quote. Love the Game of Thrones quote right there. ServiceNow's in an interesting spot. I think ServiceNow, I think it's a hold at its current price. This week it briefly touched $130 a share, I believe, earlier this week and last week. But with ServiceNow, I would hold shares. I would consider taking profits if it broke out above 135. Filippo says, do I trade options? I occasionally do. Yeah, occasionally. Not as frequently as I trade stocks, though. Can we look at Celsius? Yeah, I mean, we can take a look at Celsius. To be honest, I'm really not a huge fan of Celsius at this price. Massively overvalued at this price. I mean, it with a trailing 12-month PE of 152 for a beverage company, you're pricing in a lot of growth, and that's after bad guidance from the second quarter report. So really not that great. Should I sell NVIDIA? Coop, I wouldn't say yes or no. I'd probably hang on to it. Probably would hang on to it. How about IREN? IREN is not something I'm super into. Neoclouds in general, even with IREN at the current price it's trading at, this is massively overvalued in my opinion. Despite the fact that it's coming down 6% today, and we're going to find out what its earnings are tomorrow, I'm not a huge fan of the company at this price. So, and honestly, I'm just not bullish on Neoclouds in general. Will I speak about NVIDIA earnings? I'm going to live stream the call. We will see the call. So I'm going to live stream it. Everyone's going to see what they say, and we're going to find out together what the results were for NVIDIA. Viva Systems, interesting company, Brandon. As far as me getting in now, would I consider it? To be honest, I'm looking at other opportunities. I think there are better opportunities than Viva. So yeah, I'm just not a huge fan of Viva at this price. Thanks for the rose, Mr. Cook. Appreciate you. Tom, I'm avoiding Oracle. Oracle, the credit risk with Oracle is starting to become a problem. It looks cheap on paper, and the fundamentals show a lot of strength, but when you actually look under the hood and look at the quality of earnings and you look at everything else that's going on with Oracle, I'm not. The OpenAI risk is just too much. Avgo, Broadcom. I think Broadcom's too expensive. I'm not a huge fan of it. Really not a big fan of a Broadcom, especially at the price it's trading. Do I like Fermi? Tommy, I think there are better REITs out there. I'd have to look at the underlying real estate assets for Fermi. I know it's kind of gained popularity in recent days. It's actually not having a good day, down 5.8%. Not a big fan of it. Not a big fan of it. What do you think of Ondas? I think Ondas is cool. I think the drone game is interesting. It's fun. They're showing signs that they're actually getting some serious traction with other governments around the world and some of the contracts that they've nailed down. But the recent correction that we've seen with Ondas, especially over the last 2 weeks, I think was justified. It's still a little bit expensive for my taste, even at its current price at the moment. Name of the website. This is Yahoo Finance, guys. And then this is Barron's pulled up right here. And this is where we can look at different quarterly reports and numbers. I've got Broadcom pulled up on Barron's, but this is Ondas. Benjamin, thank you so much. Appreciate the thumbs up, man. Thank you. Google, I think with respect to Google, it's my second favorite hyperscaler. The off-balance sheet activities with Google are starting to get a little bit concerning. Benjamin, thank you so much for the thumbs up. Thank you. So yeah, with Google, I'd call it put it in second place out of all 5 hyperscalers. What about Meta? Meta, I would put in 4th place out of all 5 hyperscalers. I know that Meta recently settled that lawsuit, so that's good. It was only $17 billion for them. That's a drop in the bucket for them. But again, like my concerns with Google, Meta has the same ones, especially with Meta's off-balance sheet activities. I'm really, really concerned about what Meta's doing and the lease liabilities it'll be on the hook for in the future. So yeah, MP Material. MP Materials is cool. Honestly, I'm a bigger fan of USAR, but I understand why people like MP Materials. I believe they're now free cash flow positive, which is good. It's good rare earth exposure. And I think it's not a bad play. I don't think it's a bad play. I don't love mining companies though, and there's a decent amount of short interest. With respect to performance year over year, it's losing money. And quarter over quarter things seem to be improving, but profit 2026 hasn't been great. And we've seen the quality of the company's balance sheet come down just a little bit, and a lot of CapEx expense, it looks like. They're probably buying a lot of stuff. So things to like about them, I know that they're kind of getting into the superconductor space for quantum computing. That could be interesting. Just about to go into NVIDIA earnings. How much do you think the whole company will move? The market will move by? I could see NVIDIA going up as much as 1.5% and down as much as 1.5%. I'm expecting a revenue beat and I'm expecting an EPS beat for NVIDIA. It's supposed to be $2.09 per share is the street's estimate, with about $92 billion in revenue. I think we're probably going to beat both. Vistra, for those of you guys asking about Vistra's interesting. You get pretty thin margins on it, but its backlog is real. Construction companies like Vistra, they're actually making the things tangible with respect to all the data center development, or whether it's the power utility lines or whatever else that goes into it. I could see Vistra maybe hitting like 160, maybe 165 before the end of the year. But it's been a roller coaster ride. And so far we're definitely in a valley on that roller coaster ride for Vistra. It could break even by the end of the year. It's not the most exciting opportunity. Weak earnings might trigger the sell news across the market. Yeah, that's why what's going on with NVIDIA today is so important. And that's why I'm paying very, very close attention to it. So we'll see. With things with NVIDIA, we're going to find out in just over an hour here. And hopefully we'll get some interesting guidance and some interesting news. What time is NVIDIA's earnings? At 5 p.m. Eastern U.S. in about an hour and 10 minutes. So it should be some pretty interesting news. Yusuf says swivel. SWVL Holding Corporation. All right, Yusuf, what's cool about this? To be honest, it looks like some crummy little micro cap with the $24 million valuation. I don't get it. Disruptive mobility technology company provides mass transit solutions in Egypt, Saudi Arabia, UAE, UK, and Kuwait. Offers B2C product that provides riders a network of minibuses. Interesting. Okay. It was founded in 2017 and it's in Dubai. All right. If you've been around since 2017 and you're publicly traded on the NASDAQ at $2 a share with a $22 million market cap, there's probably something to be concerned about. Quarter over quarter performance doesn't look great, but this is outdated data. So I'd have to go to the filings themselves. I mean, what's the bull thesis here, Yusuf? What do you like about them? Because I don't really see it in my, I'm just scratching the surface here, and I know there's more to see, but what's so cool about this? Well, what's going on, man? Good to see you. Good to see you. Andre, with respect to Strategy Inc., go check out my YouTube channel. I did a deep dive on Strategy Inc. on YouTube. So, yeah, with respect to Strategy Inc., their main ticker is MSTR. This is a pure Bitcoin play. It's a pure Bitcoin play. So if you're bullish on Bitcoin, but maybe you want exposure to an investment that provides you a series of cash flows, I'd recommend looking at something like STRK or maybe STRC or STRE. This is also a part of Strategy Inc.'s equity tranche. This is one of their preferred tranches. You're going to get about 11% yield on a Bitcoin investment into Strategy. Big investment from billionaires in Egypt on SWVL. I mean, that's cool. That may have diluted shareholders in like their earnings. I mean, I'd have to go look at their earnings and see what that's like. I mean, I'll definitely go check. I'll go check and see. I'll go look at their filings. Very small micro caps like that, I don't pay a ton of attention to, if I'm being honest. What about Ondas and Nokia? I think Ondas is more real than Nokia is. Nokia feels like a meme. But I appreciate the idea, Yusuf. Small micro caps like that are often overlooked. Check out Beta. Florida is about to approve electric flying vehicles between airports. Okay. Looks like these guys are losing a boatload of money. Designs, manufactures, and sells electric aircraft and charging systems worldwide. All right. And what's their performance been since over the last 10 years? I would imagine it's pretty ugly. Yep. Losses expanding. Big fundraise in 2025 that diluted shareholders. Quarter-over-quarter basis doesn't look ideal. They're losing $148 million a quarter. And they've been doing this since 2017. Yeah, 2.85 beta. I mean, we'll see. It's bold. It's a cool idea. I'll probably pass. I will probably pass on it. Evan says, sup, Andrew, thoughts on implications for Nike with DKS tanking 30% on weaker reported shoe demand? Yeah, not good. Obviously, it's not good, Evan. It's unfortunate that Nike's suffering as a result of, poor performance from Dick's. Q2 at Dick's was a total disaster. And I just posted a TikTok about how the management's guidance was a complete 180 from what it was. Quarter over quarter. Q1, they were all, sunshine and roses. And then the second quarter, they're like, 2026, the rest of the year's not looking so great. That's not good for Dick's. Does that mean Nike's going to get punished? Absolutely. Nike's down 2% today. But here's the thing. All footwear brands are in trouble, at least according to Dick's. If you go look at like On or Hoka's, their inventory movements aren't ideal either. Despite the fact that On is up 1.3% today. Yeah, I mean, it sucks when outside influences or when a key customer of Nike's doesn't perform well, but it happens. It happens. Bloom Energy. With respect to what's going on with Bloom Energy, it's a cool thesis. It's a cool business. I think what they're doing is interesting. It's very expensive, though. Very, very expensive. And I don't see the stock going up above $300 a share like it was earlier this year. Check InnoData, high growth, low price. Yeah, a lot of people have been asking me about InnoData recently and like the AI training models that they have. They're down 2.5% today almost. I need to understand InnoData's business better and how exactly they make money in order to ascertain whether it's a good investment at the moment or not. I know that they've had good fundamentals. Their results have been good. And they've probably deservedly and rightfully gotten the attention that they deserve. Quarter over quarter results look fine. The company's balance sheet is improving, which is nice. And they're free cash flow positive. So with respect to InnoData, the thing that I would want to know as an investor is, okay, what is their growth plan and what's the quality of their revenue and the quality of their earnings? That's what I really want to know. I ran beating earnings, yes or no? I would imagine they'll beat revenue, like NeoClouds over this last quarter, probably slight beat. There might be an earnings miss though. Thoughts on Meta after the news? It was a drop in the bucket for them. It was the smart move for them to settle with respect to the lawsuit. What concerns me about Meta, though, is their off-balance sheet activity, and what concerns me about Meta is the amount of stuff that they're doing with respect to AI development and what Mark Zuckerberg's plan is for all that AI. I don't like his strategic vision. This dude can't see the forest through the trees. So it's me not buying Meta is more so kind of like a bet against Mark Zuckerberg, and it's also my concerns about how they're financing a lot of their stuff that they're not liable for yet. My favorite hyperscaler right now is Microsoft. Is Roblox child labor? They make the games, but the kids also make money too. Well, the thing that concerns me about Roblox is the P3DOs on their platform and going after the kids. That's an issue, and I know that that's been a serious issue for the company for a while. So that's something that I would be more concerned about, Jeremy. And Roblox, as a result, has had a bad year. A pretty bad year. I don't know how they're going to turn things around. I guess the market doesn't buy it yet. What about American Airlines at this level? AA or Alcoa? I'm sorry. AA. You said AA, not AAL. Well, I know the tariff news is something that is a bit of concern. Would I get in at this price? Honestly, no. As far as steel is concerned, it's cyclical, so it's not a defensive play. And the other products that they have are also cyclical, but this is not like it's a lot of risk that's hard to price in because of what's going on politically. So I'm not necessarily stoked on this idea or this company as a potential investment. I'm going to pass on Alcoa. So at these levels, no. Boeing thoughts, Josh? Boeing is a long way to go. Boeing's got a long way to go. And with Boeing, I think that there are some problems with Boeing that they need to work on. The delay with the 777 program, the 777X program is pretty big. That's been delayed for a long time. And they're still expensive, in my view, relative to their earnings. NVIDIA time. NVIDIA's at 5 p.m., guys. It's at 5 p.m. U.S. time. So we still got another hour. Do you think it works post 777X? We'll see. They have to manage their expenses well, and they got to keep their supply chain tight. I mean, Airbus has been eating them alive for the past, 5, 6, 7 years. And with respect to Boeing, I'm more bullish on Airbus than I am Boeing. Evan asks, thoughts on Dutch Bros? For coffee, it's a bit of a high valuation, but it's a real estate development play at this point, especially if it's mainly a franchise model. It feels a bit expensive. I mean, but you can compare it to something like Starbucks. And Starbucks isn't too dissimilar with its valuation. It's around 62 times earnings. Dutch Bros around 70, 71. So I, to be honest, if I want to get into the coffee game or be a shareholder in a coffee company, I'd rather hold Starbucks. Bigger moat, slightly better valuation, that kind of stuff. And I know that they've been pretty aggressively trying to clean things up at Starbucks. Thoughts about market reaction on NVIDIA? I think the market, we'll pull up NVIDIA's chart here. I think that the market will react okay. We'll probably see at most 150 basis point swing in either direction from around $210 a share. Now it's slightly up after market, but we still have about an hour till earnings. So we could see things swing in one direction or another. It wouldn't surprise me either way. But what I'm really curious about is management's guidance. It's what Jensen Huang's going to end up saying. Check Zeta. Is it a buy right now? Yeah, sir. Honestly, no. I'm not, with respect to Zeta, I need to have a better idea of their business, but Zeta is, it's okay. It's not a totally unrealistic valuation, but the growth path is something I need to have a better understanding of. And if we pull Zeta up here and just kind of look at how they've been over the last couple of quarters, revenue growth has been good, and their losses are shrinking, which is good. 2026 though leaves a little bit to be desired so far. CRM beat. What did they come in at, Jorn? Boom! Look at that, up 6% after market. Nice. What was their beat? By how much, Jorn, for Salesforce? At the extreme, does Nvidia hit 190? I think that would be a very extreme case. Is Tesla buy price? Yes, valuation not based on Cybercabs or Optimus yet. Tesla, honestly, Miles, I'm never going to buy shares in Tesla. It's always been massively overvalued, and I don't buy automotive companies to begin with. Raised guidance. Is this for Salesforce? They raised guidance? Dang, that's up quite a bit. AVGO, a buy or sell? A hold. They raised guidance. Salesforce raised guidance. Nice. Very interesting. Came in at 11.35, beating 11.3 billion at revenue estimate. Nice. Okay. I'm going to look it up here really quick. So it's $3.27 per share. Do we have a number on EPS for Salesforce, for CRM? Is that somewhere? What are we sitting at with that? $5.90. Whoa. $5.90 in EPS? Damn. That's a pretty big beat. Pretty big beat. Guidance raised by 200 mil. Nice. Looks like ServiceNow has competition again. I think Tesla is an automotive company, AI, battery, power chip, robotics. Even still, the price that you have to pay to own shares in Tesla doesn't justify any of that. I mean, yeah, I know Tesla is like, okay, yeah, we're going to start building robots and that kind of stuff, and there's rumors that they're going to merge with SpaceX. Really not that excited about what Tesla's doing, and their valuation is just nuts. NVIDIA earnings when? NVIDIA earnings are in about 40 or 54 minutes. What does EPS mean? Earnings per share. You think of option call 1016 for NVIDIA. It depends on your strike and premium, AMG. How do you feel about MP? I see $100, $150 price in 3 to 5 years. Yeah, hard to say. I don't think that's totally unrealistic, but that's pretty optimistic given where we expect the price of some rare earths to move. Their efforts to pursue materials to provide superconducting materials for quantum computing, I think, is interesting. USAR is another interesting play on that front. Why aren't you excited about Tesla and what it's doing? I'm not excited about Tesla's price. Tesla is a company, they don't get me wrong. The cars that Tesla makes is cool. The things that Tesla are doing is cool. I get why people like Tesla. The self-driving technology they have is very cool. The price doesn't make sense to me. This is a $1.4 trillion company that's priced at 317 times trailing 12-month earnings. It's always been this way, though, with Tesla. Always. It has always been this way with Tesla. It gets the premium treatment because Elon Musk is the CEO. That's fine. I'm not interested at it at this price. MP is a big magnet player. All the robotics and electric vehicles also bank off that. Yeah, I mean, I get that. That's a good call too, Carson. With MP Materials, I get why people like it. To be honest, it feels like a 6 1/2 dozen style situation between MP Materials and USAR. Both good ways to get exposure to rare earths. Mining companies in general, though, I'm just not huge fans of. It's the commodities themselves. So if there was a futures market for something like samarium, I would be much more interested in that as opposed to owning shares in the company. About CrowdStrike. CrowdStrike's going great. Good. Looks like we have a beat with CrowdStrike. Anyone know what the beat is or how much it is? Up 9%. Yeah. One of my top 3 companies right now. Top 3 bullish picks that I've done a lot of homework and a lot of research on. First is Reddit. Very bullish on Reddit. I'm also pretty bullish on Take-Two Interactive. And I'm also bullish on AppLovin. I'm going to post my deep dive video on AppLovin tomorrow. The sell-off that we saw for AppLovin earlier this month, a couple weeks ago, this was a massive overreaction. I think it's a really solid time to get in at AppLovin right now. The company's fundamentals are really strong, and their e-commerce push is pretty interesting. Thoughts of Nebius? An overvalued mess. An overvalued, debt-ridden mess. NeoClouds in general. There's going to be winners and losers in NeoClouds, don't get me wrong. Nebius might be one of them. It's not a great company, though. Really not a big fan of it. And what's funny is that they were originally only supposed to have a $4.5 billion convertible note offering. That's now grown to almost $6 billion. So, yeah. ServiceNow just hit 130. Is this true? Almost. Up quite a bit. Okay. That's a pretty strong reaction off of Salesforce's earnings. I mean, I can see why that's good news. Why Salesforce having a big beat is good news for ServiceNow, but this is pretty big. This is a pretty strong reaction. So, yeah. What about Oracle? I'm not a fan of Oracle. Don't love it. At this price, it's Oracle's credit risk that I'm nervous about. Synopsys is down. Ooh, ouch. Not great. Not great for Synopsys. Meta thoughts? Meta, so out of all 5 hyperscalers, I put Meta in 4th place. There's better ones to pick. I think Amazon, Google, and Microsoft are better than Meta. Opinions on Nike? Yeah, so with Nike, obviously what sucks is the Dick's Sporting Goods day yesterday was a total nightmare. That was an absolute disaster of an earnings report for Dick's. That impacts Nike directly. So because Dick's can't sell shoes, that means that because Foot Locker can't sell shoes, that means shoes are sitting on shelves, inventory's building up, there's no new orders for Nike stuff. Mainly when it comes to shoes. So, yeah, I mean, do I still like Nike? Yeah, I do. Not as much as I did, especially after this guidance from Dick's. Am I being an optimist about Nike? Probably. So, we'll see. We'll see with Nike. I do like it at its current price. I think it's slightly undervalued. And I think that the market is overlooking the growth in revenue and earnings that we have seen in all of its segments except China. AppLovin, I'm very bullish on. My target price for AppLovin, honestly, I could see AppLovin hitting $500 a share again. Like this is what happened with AppLovin was a massive, massive overreaction by the market a couple weeks ago. AppLovin's at a fantastic price. An absolutely fantastic price at the moment. What do you reckon? SoFi, Iron, Zeta, or Fly? I don't love all of those, to be honest. Yeah. Zeta, I guess. I would pick Zeta. I think you're going to probably see the most growth out of them. With SoFi's boring. SoFi is a boring stock. It's been boring for several months now. Yeah, it's still hanging out between 15 and 20 bucks a share. It's been this way for a long time. IREN is having a pretty bad day today. I know their earnings are tomorrow. We're probably going to see a revenue beat from IREN, but its model in general I don't love. I think about Roblox. I think Roblox has a P3DO problem that they haven't fixed yet. Robinhood's also boring. Well, Robinhood's been a lot more exciting than SoFi has. Yeah, I mean, earlier this week we saw Robinhood's peak up above 110 bucks a share, and over the past month, it's had a pretty strong month. So I'm, to be honest, I'm more interested in Robinhood than I am SoFi because Robinhood's doing more interesting stuff. Does boring necessarily mean a bad stock for SoFi especially? Boring means that the potential upside for the company is going to be driven on news as a result of some type of new product they're introducing, or maybe a very strong revenue or earnings beat or something like this. But what I say, I'll show you what I mean by boring. This is, when I say boring, I'll show you what I mean. This has been SoFi's performance so far this year. The last time it was above $20 a share was February. It was 7 months ago. And it's been hanging out between 15 and 20 bucks a share since then. And this is after 2 earnings reports. So we're getting 2 new sets of data in those last 7 months, which indicates to us that the market's probably spoken about its valuation, which is already at around 40 times earnings from a trailing 12-month perspective. And given the business that SoFi's in, that's pretty high valuation. So, no, I'm not super excited about SoFi. Data was good, though. I mean, yeah, the data can be good. The outlook can be good. But given the fact that SoFi is basically a bank with a couple extra bells and whistles trading at 38 times earnings, that's kind of expensive, to be honest. So, yeah, for SoFi, I'm steering clear of it. PE too high for SoFi? Yeah, I agree, Jesus. P-Lab. Photronics. I don't know if I've heard of these guys. Semiconductor play, okay, and materials. Photomask products in the U.S., Taiwan, China, Korea, Europe, and internationally. Photomasks that are used in the manufacture of integrated circuits and flat panel displays and transfer circuit patterns onto semiconductor wafers. Interesting. Cool. Very, very interesting. Huh. Okay. And what has their recent performance looked like? Trading at only 11x earnings with a beta of less than 2. Quarter-over-quarter results seem okay. Profitability is coming down, though. That could be cyclical. Like we're seeing, what, 62 million in net income in the fourth quarter, down to 32 million in the second quarter 2026. 15% margin isn't bad. And we might be free cash flow negative this quarter. Yeah, I mean, so it definitely worth some investigation for sure. Definitely worth taking a look at as far as it being a potentially a good company. This is kind of crazy though. So we were trading at 55 bucks a share back in June. And then that earnings report came in and it missed by 20%. Oof. So you really got to look under the hood to see if this is a buy the dip opportunity. It might not be. How long till NVIDIA earnings? I'm not from the U.S. NVIDIA earnings is in about 40 minutes. NVIDIA earnings in 2 minutes. The call is in 40 minutes. They may release it. Hang on one sec. One sec. So for NVIDIA, we're expecting to see... we're expecting to see... $2.09 per share. I'm on the investor relations website right now. I'm not seeing anything huge. Calls at 5. They said 420. Yeah, the call's in 40 minutes, but are they going to release the numbers in 2 minutes? I'm on CNBC right now looking. Yeah, $2.10 estimated, $92 billion in revenue. Where are NVIDIA's earnings going to end up? I haven't seen anything yet. Yeah, it's the top pick right now. Haven't seen anything yet. Haven't seen anything yet for NVIDIA. And the movement suggests, ooh, and it fell. Yeah, see, this is when I wish I had a Bloomberg terminal right now. They released at 420, just checked. Let me check. I'm on Earnings Hub right now. Okay, down 84 bips. NVIDIA's coming down. Yeah, so it's just kind of hanging out right here. I don't know what this is. Does anyone see anything? I'm not seeing anything with respect to the actual results for NVIDIA. Because the call's at 5 with Jensen Huang. We're obviously going to be listening to that, but the numbers, I guess, it's out. What is it at? What are we at with NVIDIA earnings? $96 billion, beat by 4%. No, that's the first quarter. EPS beat by 6%, revenue beat by 4%. $2.22 per share in EPS. Dang. Kind of wild. Kind of wild. Yeah, I'd imagine, and look at this. Wow, this is a pretty big reaction. Coming down quite a bit after that beat. Here we go. $96.2 billion in revenue, $2.22 in GAAP adjusted EPS per share. So 4.5% beat in revenue, 6.2% beat in earnings. Kind of big. Why is it dropping? Yeah. What was forward earnings? I don't see those yet. I don't know. So this is why it's important to pay attention to what the guidance of the management is. Just dropping due to profit taking? I don't think so. This happened last 7 quarters. Yeah, I mean, this is more than I thought the price is going to move. I was expecting a 150 basis point movement, and it's kind of all over the place right now. I know the volume's going nuts. But this is why you pay attention to what the management says during the earnings call as opposed to what the actual results are. Data center revenue beat 89 billion versus 85.8 billion estimated. Doesn't matter if earnings beat forward guidance is that CapEx and hyperscalers are going to slow. That's exactly right. And that's exactly what we're going to hear from Jensen Huang And that's exactly why we need to talk to him or hear what he has to say in about a half an hour. Because what's going to be said on that call is a lot more important than what has than what these results are. I mean, here's Earnings Hub right here. Yeah, 4.46% beat on revenue and a 6.2% beat. So yeah, the trend continues with NVIDIA. This is a surprise to no one. So we'll see. We'll see how things move. And now we're kind of back in that range where I thought we were. But again, that can change very, very quickly. My predictions for what are my predictions for NVIDIA? So as far as the guidance is concerned for NVIDIA, I think we're probably going to see pretty bullish language. I think we're going to hear Jensen Huang say, we're continuing to see demand outstrip supply. Vera Rubin is going to be delivered soon. Blackwell deliveries numbers are up. All kinds of stuff like that. I'd imagine he's going to have a lot to say about data centers. What I'm really interested in hearing him talk about, though, is I want to hear him talk about the $500 billion plan to create GPU-backed bonds. That's what I'm interested in hearing about. I'm also interested in hearing about if they say anything with respect to the guarantees or signing as a guarantor on some of these data center leases for AI companies. Because NVIDIA, at this point, it's almost a bank in a lot of ways. It's making so much money, it's almost a bank. But how long will the demand continue before Michael Burry is right? If I had a crystal ball, I'd tell you. That's your guess is as good as anyone's. It's crashed. I mean, I wouldn't say it's crashed. Like this isn't too crazy of movement. There was a big volume spike right here, though. You hear OpenAI said their new chip is better than NVIDIA's. Pretty big news. Well, I know that Sam Altman likes to talk. And Sam Altman likes to be the center of attention. So yeah, no, I don't. With respect to what OpenAI is doing in their own chips, that's fun. And yeah, did earnings come out? It did. Earnings came out. This is NVIDIA's results. So we got results, and then in about 30 minutes, we're going to get on the call. 4.5% revenue beat, 6.2% earnings beat for NVIDIA for the second quarter. I'm going to go to their investor relations website and see if I can find anything. If they have a press release out, or if they have like a PDF out. Yeah, nothing yet. They don't have a report out yet for 2027 Q2. Fiscal 27, I should say Q2. So nothing yet there on that perspective. What website am I using for earnings? This is earningshub.com right here. And then right here, you're looking this window right here. This is Yahoo Finance. And then this is Barron's. Stock dropping when it beats earnings. Yeah, I mean, it's not a huge surprise. It's happened with NVIDIA before. And it's not surprising that NVIDIA beat again. And where it's currently trading at, I mean, yeah. The expectations are huge. It's probably tanking because next year expectations are bigger. It's all about forward guidance. All about what Jensen Huang says in about a half hour here. When would you buy it again, though? As far as NVIDIA's fundamentals are insane. They're the best in the world at what they do, and it's not even close. Their valuation, given what their earnings are, isn't entirely crazy either. And it's been a good year. It's been a decent year for NVIDIA. As far as getting in today, I mean, I'm going to read the report. I'm going to look at the guidance. I'm going to read everything that was said. I'm going to look at what Jensen Huang is going to end up saying. I want to hear everything that he has to say about all of this before I kind of decide. Because it's not NVIDIA as a business that makes me hesitant. It's what NVIDIA is doing outside of selling chips and GPUs that makes me a little nervous. Like, for example, being a guarantor on like $100 billion data center in Ohio. all of, like the circular financing that's going on. Or what's especially concerning is GPU-backed bonds that they're trying to develop with Goldman Sachs and KKR right now, and other large asset managers. The numbers today will decide AI for the next months. I think what Jensen Huang has to say with respect to guidance will have some pretty big implications on where the market's going to be headed in the near term. Look at SpaceX. Yeah, how did SpaceX do today? Kind of flat. Interesting. Only trading at 24.4 PE. Yeah. Yeah, I mean, no, there's no denying that that's good for a company like Nvidia. And hence why I said the fundamentals are extremely strong. Have they reported yet? Yeah, Nvidia reported. Here are the results for those of you who are just joining. $96.2 billion in revenue and $2.22 in GAAP adjusted EPS per share. So 4.5% beat on revenue, 6.2% beat on income. I don't think it was quite as big as last quarter. Still, I think that's a bigger than average beat for Nvidia. Gross margin at 74% versus 75% estimate. Interesting. I mean, that's still extremely good, but, you know, a little bit of a downturn nonetheless. Thoughts on Reddit? I'm extremely bullish on Reddit. I like Reddit as a stock. Reddit's fundamentals are very impressive. The market doesn't like Reddit because of what's going on with Google right now. I think that's a silly reason to have it traded only 36x earnings. This is a fantastic business. Its revenue growth is very impressive. KPIs are up. KPIs are growing, especially internationally. And I don't think AI content licensing is off the table for them. There's a lot of things to like about Reddit. Very bullish on them. My target price for Reddit's about 230 a share for now. But I definitely like what's going on with Reddit. It's time to YOLO on NVIDIA. Give it a shot and let us know how that goes. Is the earnings out? Yeah. NVIDIA earnings came in at $2.22 EPS, GAAP adjusted. My target for Reddit's 260. No, I don't think that's unrealistic either. My DCF model probably has some different assumptions baked in. But I don't think 260 is unreasonable. Earnings out, still dropping. Yeah, Filippo, NVIDIA came in at $2.22 in EPS, $96.2 billion in revenue. So 4.5% beat in revenue, 6.2% beat in earnings. So pretty interesting stuff. It was, to be expected, a beat to be expected, and I think a bigger than average beat. Opinion on gold and silver. Robert, I always hold gold and silver in my portfolio. More gold than silver. I hold gold as a macro hedge. Gold is my favorite macro hedge at the moment. So, yeah, I do have exposure to gold. Thoughts on Broadcom? Denzel, to be honest, not a huge fan of Broadcom. I think Marvel's more interesting. The valuations of both of them, though, are kind of high. The 60x trailing 12-month earnings in the semiconductor space is a little pricey. Like you can still go to something like Applied Materials and Lam Research and still get solid exposure. So Broadcom, I mean, if I have shares in Broadcom, I'm not going to dump them. It's about flat on the year. I think there are more interesting entry opportunities for different companies. Is it official, the earnings of NVIDIA? Yes, Harvey, it is. Yes. These are the numbers right here for NVIDIA. It's like 13 consecutive. This is the 14th consecutive beat for NVIDIA. Yeah, 14 quarters in a row. Kind of unbelievable. Like actually insane. 14 consecutive quarters. SoFi thoughts? SoFi, my view, is kind of boring. Not a fan of SoFi. It's been a weird year for SoFi, and I don't love its valuation. I mean, it's been hanging out between 15 and $20 a share since February. So take that as you will. I'm not a huge fan of SoFi. Thoughts on NVIDIA partners in the data center space like Lumentum and Constellation? Yeah, so with Lumentum, we can actually go look. Like maybe AOI would be an interesting one. How are they reacting to NVIDIA's earnings? Not a ton. Oops, not Lumentum. Good day for Lumentum, though. After hours, not a ton of movement. Yeah, I think we may see it move more after this call with Jensen Huang. Again, it's going to be about the guidance. SoFi is the TikTok stock. A lot of people are like, tell me about SoFi. I'm like, what's? It's not that exciting. It's really not that interesting. I think Robinhood's more interesting than SoFi. Check out Abercrombie and Fitch. Yeah, they had some pretty insane results, did they not? Wow, they went up today, 36% on the day. Wow, pretty crazy. They had a pretty big beat, no? For Abercrombie. That's pretty good. What would be considered bad guidance from NVIDIA? Here's what I think. If bad guidance from NVIDIA, at least in my view, is it's like vague language about the demand for chips, and it's vague language about timelines with the delivery of those chips. So like if Jensen Huang says, obviously, we're very proud of our business. We delivered very strong results this quarter. We are currently evaluating different options to move this to there or deliver this to these customers. We're experiencing some delays with, development of Vera Rubin or something like this, or any other type of product that NVIDIA has. So that's what I think is bad guidance. Or if they express concerns about maybe current negotiations with guarantee agreements they're signing. So if they say something like, we're finding a way to win on our agreement with OpenAI and being a guarantor, a financial backstop for them for their Ohio data center, something like that, that's bad guidance. Favorite robotics companies? I'm not following robotics as closely as I should, Miles, to be honest. Yeah. Robert from YouTube says SMCI. As far as I know, the legal concerns for SMCI are behind them. And the fundamentals for SMCI are quite strong. There's a lot to like about what SMCI is doing. It's been a bit of a roller coaster this year for them, but definitely a lot of things to like about what's going on with them. I mean, if we look at SMCI and their recent results, I think quarter over quarter things look quite strong. So this is year-over-year revenue growth has been quite good. Company's balance sheet looks pretty healthy. Margins are at about 10% as of this quarter. It's not like there's things to like about this. Obviously, it requires a look under the hood to see, okay, what are their revenue streams, quality of earnings, who their customers are, quality of revenue. That's very important to me when I evaluate a stock. What their growth story is, how they manage their cash, all that kind of stuff. So far, I like SMCI, what I've seen so far. Can we check ServiceNow? What are your thoughts? Yeah, ServiceNow, so I know Salesforce had a big beat, and that's good news for ServiceNow as well. In my view, I think if we see ServiceNow break out above 135, if I held shares in ServiceNow, I would consider taking profits. It's a hold for me at the moment. It's getting close to being overvalued. It's appropriately valued at this point, I think. But regardless, ServiceNow in many ways does deserve its premium treatment at about 80 80x trailing 12-month earnings. Because they've done a really good job with integrating AI agents. And I've done a deep dive on ServiceNow on my YouTube channel. So there's definitely some things to like about it. Opinions on BWX technology. Tom, I don't know if I've... BWXT. Is this aerospace and defense? Okay. Manufactures precision naval nuclear components, reactors, and nuclear fuel. Okay, so they're a defense contractor for the Navy. Tool delivery systems, commercial nuclear steam generators, nuclear fuel handling systems. Okay, got it. It could be interesting, Tom. I don't know a ton about that business. I'd have to learn more. I'd imagine they have pretty steady, predictable earnings, though. And steady, predictable revenue. This is a pretty low beta for a pretty high PE. But again, I'd have to do more homework on them. Why am I bullish on AppLovin? Couple reasons. The reasons why AppLovin's stock fell so hard a couple weeks ago is because the company said it's going to take a little bit of time to train our AI model, and the market hated that. That was the market's silly. It's being completely silly about this. AppLovin is very, very vastly undervalued at the moment. Last year, they sold off their apps businesses for like $750 million, like $400 million in cash. That was a smart move. And as a result, since then, their margins and their revenue and their earnings have improved. AppLovin has a very good moat as well. They're probably the best in the world at placing advertisements in a mobile digital format. And they have access to proprietary data in a market that they've set up. It's pretty valuable stuff. There's a lot of things to like about AppLovin. So yeah. I'm a big fan of AppLovin at this price. My target price for them, I don't have one yet. It could easily come back up to $500 a share. The fundamentals of AppLovin are really strong. Rocket Lab, too much execution risk for me. Obviously, I think space stocks and space companies are interesting. And I know they had a pretty good second quarter. Not a huge fan of it, though, at this price. It's just not a huge fan of it. So, yeah. Adobe. Adobe is another interesting play. I've called Adobe a value trap before. I'm interested in hearing someone's bull thesis on Adobe, though. In many ways, Adobe has behaved like a value trap, and I know there's a lot of questions about AI and what it's doing eroding Adobe's moat. So there are reasons to be concerned or reasons to be like, I don't know if Adobe's the right choice, but I get why people like Adobe too. I need to be really convinced, though, about Adobe. Do I like TTWO? Yeah, Eric, I still like TTWO. And yes, NVIDIA's earnings are out. Will NVIDIA tank tomorrow? It depends on what Jensen Huang says, but I don't see why they would. Do I like TTWO? Yes, Eric, I like TTWO. Yes. Nebius to 1,000 after earnings. That'd be hilarious. That'd be one of the best short opportunities ever. Is AI not killing Adobe Photoshop? See, that's the question. And that's the I need to know the answer to that question. I don't have the answer to that. I know companies like Figma are kind of like breathing down Adobe's neck when it comes to all that stuff. Hopefully NVIDIA will fall to 189. Adrian, I don't know. That's a pretty big fall. Do you see TDWO as a swing for GTA 6? Yes, and for additional reasons as well, why I like TTWO. Do I like Palantir? I'm impressed with Palantir's growth as a business and Palantir's fundamentals. I'm not a fan of Palantir's valuation, and I'm not a fan of the leadership. That's what I don't like about Palantir. So, yeah, I mean, I'm avoiding Palantir at this price. Technical indicators seem to be supporting Palantir at this valuation, so I'm sitting on the sidelines for now. CrowdStrike rallied. Yeah, what's CrowdStrike looking at? I know they, I believe they had an earnings beat, up 9%. Nice. Let's actually go check. I want to check CrowdStrike's. What did CrowdStrike's numbers come in at? Oh, wow. Yeah, there we go. So here's CrowdStrike 2027 results, 1.5 billion in revenue, 2% beat. Very big beat on GAAP adjusted earnings, 31 cents a share. That's big. That's why people like it. And that's good. That's good. I was a little bit of a hater of CrowdStrike's margins, so it's good to see that that's turning around, which is good news. There's a lot of things to like about CrowdStrike, but here, like, if we look at quarter-over-quarter performance for CrowdStrike, I mean, it's razor thin, and they need to improve that. So it's good news that actually happened for CrowdStrike. NVIDIA outlook moving to the forward to the end of the year. As far as NVIDIA's price, Christian, I could see NVIDIA maybe hitting $250 a share. That's a huge movement, though. That's very optimistic. To be honest, I'd imagine it's probably between 220 and 230, like what we've seen earlier this month, like right around here. I mean, it had a solid beat from revenue and earnings perspective, but with NVIDIA, yeah, no, I'm just not a huge fan of NVIDIA. Like it's the guidance. It's not that I'm not a fan of NVIDIA. Of course, I'm a fan of the company that does extremely well, but it's the guidance. Thoughts on CoreWeave? CoreWeave is one of my highest conviction plays at the moment. I'm short CoreWeave. CoreWeave is the foundation of this company is built on quicksand. I had multiple positions in CoreWeave. I closed them out. Closed out one of my short positions. I still have a short position at 95 a share in CoreWeave. This company's a mess, an absolute mess. So Tom, I'm short CoreWeave. What do you think about quantum stocks in general, like IonQ? Christy, I want to love quantum stocks. Companies like IonQ, I think what they're doing is impressive. Companies like Rigetti are cool. The income statements are pretty ugly, though. It's just a black hole of R&D costs in quantum at the moment. So with respect to getting into quantum, yeah, I mean, there are things to like, but it's too early for me. And I think the commercial case for quantum will become much more prevalent to us in the future, and no doubt quantum computing is a future. For me, it feels a bit early. Do I think Palantir is expensive? Inimul, yes, I do think Palantir is expensive. Too expensive for my taste. Sentinel-1 tomorrow. Check the report. What's the ticker? You have an opinion on Nebius like CoreWeave? Yeah, Benjamin, I'm not a fan of Nebius either. In fact, Nebius in some ways is almost crazier because Nebius has worse revenue and worse earnings and arguably just as big of a debt problem, but it's somehow more valuable. So, yeah, take that as you will. It's kind of hilarious in a lot of ways. What stock am I most bullish on right now? Garment Display. I like App11 a lot. I like Reddit a lot. And like I also like a solid defensive play in my opinion is Waste Management. I think this is a really solid defensive play at the moment. They're trading at a solid PE ratio, incredible moat, solid yield. There's a lot to like about Waste Management as well. Thoughts on Oracle? Mark, honestly, I'm not a big fan of Oracle. Too much credit risk. Thoughts on SYM, already profitable robotic company? Well, let's look, Miles. Let's take a look. We're sitting at a 450 PE. Nice. 23.5% of the float's being shorted. And on a quarter-over-quarter basis, they finally hit profitability with Pretty bad operating cash flow. And yeah, so definitely not. So we're free cash flow negative this latest quarter. Balance sheet seems okay. I'd like to know how much of that is debt. And their cost structure is probably something worth taking a look at. $720 million in revenue though is impressive. The types of robots they got. I mean, let's look at their profile here really quick. Enhance operating efficiencies in modern warehouses. The company automates the processing of pallets. Okay, cool. Got it. No, I mean, it could be an interesting stock. Right now, I don't know. Good time to get into AppLovin. Andrew, I think so, yeah. I do. I really like AppLovin at this price. What happened to Reddit today? Don't know, to be honest. But that's fine. I still love Reddit at this price. I mean, the market's making all kinds of mistakes with this company. Iren, Kevin, I'm not a fan of Iren. Not a fan of Iren. Not at this price. What about Caterpillar? Caterpillar has had one of the most impressive years for an industrial that I've ever seen. I did a DCF on my page on Caterpillar right around here back in September. It was at like $4.36 a share. And back in September, I think my target price was like $5.70. And now we're at $821 a share. Caterpillar's growth and Caterpillar's earnings have been fantastic. Back in June when we were around here, I think that was around like 55x earnings. That was a little expensive, but it's pretty awesome. The Caterpillar story. I really wish I would have listened to myself more. About a year ago when it was trading at that level, would have been a fantastic investment. Really impressed with Caterpillar, to be honest. Is it a good time to get in now? Remains to be seen. I need to look closely at it. Am I going to make a vid on AppLovin? Yes, that's coming out tomorrow, Andrew. Yeah. Yep. AppLovin video is coming out tomorrow, and we're going to dive into the details all about AppLovin. You think a good entry is for Reddit? Can it go lower? I'm sure it can go lower, Luca, but I like it now. Folding VOO, NVIDIA, SMH, would it be dumb to add AMD as well? Andrew, I think if you want to get into a GPU company, a company that produces chips, NVIDIA would probably... I don't understand why people like AMD so much at the valuation it's currently at. NVIDIA is just a better business all around, in my view. Why Reddit? McDaddy Poppy, go check out my YouTube channel. I do a deep dive into Reddit there. We're selling off NVIDIA for AppLovin. Christian, that's a tough call. It depends on when you got into NVIDIA at. When it's called with NVIDIA, it's in 10 minutes. 10 minutes. We're going to be joining the call. We're going to be joining the call for NVIDIA. Don't worry. And I also probably need to add... One sec here. Don't need that. Yeah, I'm going to make sure that we're playing the audio for the call as well. So I'm going to get that set up here really quick. One sec, hang on. I'm going to test something here really quick. Just play something.
On John Huston's watch.
Okay, good. You guys can hear that. Nice. All right, audio set up for the call. Nice. Had to get that set up so that way we can all hear it. Can we check Okta? Yeah, we can check Okta, Will. How is it doing today? Whoa! Whoa! What was going on with Okta? We're up 20%? After hours? What happened? Whoa, big earnings beat with Okta. Look at this. 22% earnings beat. Very impressive. Wow, gap adjusted EPS. It excludes one-time events. That's impressive. That's worth checking out, man. That's pretty cool. That's actually pretty dope for Okta. Why are companies like ASML doing well? Because ASML has an incredible moat. It's one of the most impressive companies out there. Like, as far as ASML is concerned, I mean, in a lot of ways, it's like TSMC. And lithography, in my opinion, is not going anywhere. Fibonacci on App 11 getting close to golden ratio, 267 and 100 week loving average. Good times. Nice. There's a lot to like about App 11. They're doing a really cool job. The e-commerce push is a really smart move. The market overreacts to stuff all the time, especially with the AI algorithm training. Are you concerned with Chinese lithography in regards to TSMC and ASML? Good question. Yeah, no, I do think it is a concern. But if ASML needs another kind of like global counterweight in the lithography business, I don't think that's necessarily a bad thing. But because it's Chinese lithography, there's probably going to be a lot of export controls and a lot of that's probably very, very heavily regulated. It's not going to be like a Boeing and Airbus situation. But that's a great point, though. With earnings out, how do you see Nvidia? I mean, it's done pretty well. It's done pretty well. The fundamentals are there. It's everything that an Nvidia is doing that has nothing to do with selling GPUs and chips that's concerning me. Thoughts on current bond yields? Yeah, how are we looking? 10-year Treasury yield. How are we looking on that front? Okay, 4.647 on the U.S. 10-year. So things have calmed down a little bit since last week. Don't love it, though. How long is the call? I'd imagine it's probably going to be half hour to 45 minutes for NVIDIA. We're going to see rate hikes in 27, right? It depends on what Warsh says. He says he's kind of letting the market do the work for the Fed. So we'll see. I believe him. Got a lot of dissent at the last FOMC meeting, though. Think NVIDIA will drop after the earnings call. Well, it's come down a bit after earnings, and that's fine. Yeah, maybe we will see more movement. Guidance is what moves stock prices nowadays. Why is ServiceNow up after close? Because of I'd imagine, Will, probably because of the Salesforce beat. Yeah, they're intervening instead of changing rates. That's also true, yes. The Treasury is, at least starting September 9th, they are. Do I think Nebius is a buy? No, absolutely not. Nebius is not a buy. Am I bullish CEG? I like Constellation, yeah. I think the power business that they have and they kind of provide is good. With respect to the nuclear play, we'll see. All right, guys, here it is. Let me know. Is this too loud, by the way? Okay, it's perfect. Good. All right, I'm going to shut up for a bit and just kind of listen what's said and maybe provide commentary here and there because it's supposed to start in about 2.5 minutes here. A little louder? Yeah, sure. Type a 1 if the volume's good. Type a 2 if it's too loud. Or type 1 if it's too quiet, 2 if it's okay, and 3 if it's too loud. Esteban, I think this is the intro music to their earnings call. They're probably getting it all set up right now on a conference call. Moneymakers, they report, here's NVIDIA's numbers for anybody who's curious. So it was a beat from revenue and earnings by about 4.5% and then 6.2% for earnings. But what's important is what we're listening to right now after this, corporate music is done with. Here we go. Wait. That's strange. It's still running. Oh, here we go.
Good afternoon. My name is Tiffany, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's second quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star, followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you. Toshiya Hari, you may begin your conference.
Thank you. Good afternoon and welcome to NVIDIA's conference call for the second quarter of fiscal 2027. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. Our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the third quarter of fiscal 2027. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 26, 2026, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Toshiya. We delivered another outstanding quarter with record revenue, operating income, and EPS. Total revenue of $96 billion, more than doubled year over year as growth accelerated for the fourth consecutive quarter. The surge in AI demand is driving a global infrastructure build-out, supported by an expanding and diverse set of growth opportunities, spanning hyperscalers, AI labs, AI natives, enterprises, and sovereign customers. We expect to grow revenue by approximately 70% in fiscal 2028. This is a supply-constrained outlook. Q2 data center revenue increased 18% quarter over quarter to $89 billion, with strong contributions from both sub-segments, hyperscale and ACI&E, which includes our NeoCloud, industrial, and enterprise customers.
There you go.
Hyperscale revenue of $49 billion grew
Look at the stock
13% sequentially, driven by sustained strength in Blackwell, reinforcing that more compute drives more revenue. As new GPU capacity comes online, our hyperscale customers delivered strong financial results in the quarter with accelerating revenue growth and expanding margins. With cloud industry backlog now greater than $2 trillion, CapEx by the top 5 hyperscalers is expected to reach nearly $800 billion in 2026 and $1.3 trillion in 2027. Today, we are delighted to announce an expansion of our partnership with AWS. Building on its already vast installed base of NVIDIA compute, AWS is deploying an additional 2 million GPUs starting this quarter through the second quarter of fiscal 29, along with Vera CPUs, some integrated with Rubin, others standalone. AWS will serve NVIDIA Nemotron family of open models on Amazon Bedrock and SageMaker. Amazon will also adopt our full physical AI stack, Omniverse, Cosmos, Isaac, and Jetson, to power its fleet of warehouse robots. ACI&E revenue of $40 billion increased 25% sequentially and 138% year over year. Growth was driven by NeoCloud capacity additions to meet the rising demand from enterprises, AI startups, and sovereigns, as well as hyperscalers purchasing capacity to supplement their own buildouts. Using NVIDIA DSX reference designs, our NeoCloud partners are bringing capacity online faster and at lower token cost. They are expected to exit the year with 8 gigawatts in total installed capacity, up from approximately 3 gigawatts at the end of 2025. Incredibly, we are seeing demand acceleration even at our scale. Customers' forecasts point to our growth doubling next year. However, as I mentioned earlier, we expect to grow approximately 70% as we are supply constrained.
That's
NVIDIA
nuts.
compute is fully utilized
That's insane.
across every cloud we serve. The economic value it generates for our hyperscale, NeoCloud, and AI lab partners keeps rising. Besides building the best AI computing technologies
Yeah,
and
Remco,
the
this is
most
live.
capable
Live earnings
supply
call.
chain, NVIDIA has 3 unique capabilities that are engines powering our growth. First, NVIDIA's architecture runs every model, and we're growing share as closed and open model adoption grow. Closed and open models alike, adoption is skyrocketing. NVIDIA runs the leading closed models, OpenAI, Anthropic, Grok, Meta, Gemini, and the leading open models, TML, Mistral, Quinn, Kimi, GLM, DeepSeek, Minimax, and Nemotron.
Just forgot the
We're
name of the
great
open
at
models.
small models and giant ones, large or video, auto, regressive, or diffusion, in the cloud or in the edge. NVIDIA is great at training, great at inference, great at agentic workloads. One platform, fungible for every model and workload, durable for the entire lifecycle of AI. That combination of performance, fungibility, and durability
Here's an
is what
EBS
makes
aftermarket, by the way.
NVIDIA the productive and financeable compute infrastructure. Our second unique capability is our full stack AI factory platform that is expanding our share of the data center TAM. Since Hopper, our revenue opportunity has grown from roughly $18 billion per gigawatt to $25 billion with Blackwell, to $40 billion with Vera Rubin, which now spans Vera CPU, Rubin GPU, NVLink, InfiniBand or Ethernet, and Grok LPU announced earlier this week. Our ability to extreme code design across GPU, CPU, NVLink scale-up networking, scale-out networking, systems, algorithms, and software enables us to deliver X-factor performance gain every generation. Vera Rubin exemplifies this, delivering 30x higher throughput per megawatt and 35x lower token cost relative to Grace Blackwell Ultra. We commenced production shipments of Vera Rubin earlier this month. Having already received purchase orders from every major hyperscaler, AI cloud, and system OEM, we expect Vera Rubin to mark the fastest product ramp in NVIDIA's history. Our networking business had another record quarter with revenue growing 18% on a sequential basis. Spectrum X Ethernet, which grew 2.6x on a year-over-year basis, is already helping us become the largest and fastest growing network company in the world. Rising adoption of agentic AI is driving an acceleration in demand for data center CPUs. Our Grace CPU, introduced in 2021, has been a great success, with revenue on a trailing 12-month basis exceeding $5 billion. Today, we are in full production of our next generation Vera CPU. As a standalone product, Vera expands our TAM even further. Vera completes agentic tasks 1.8x faster on the spec benchmark and provides 5 times the bandwidth per watt than any other data center CPU. We expect Vera to be deployed by every major hyperscaler, neocloud, AI lab, and system OEM, with shipments already underway.
Yeah, NVIDIA beat
to our
its earnings.
lead
They crushed
partners,
it.
including OCI, SpaceX AI, and starting this quarter, AWS. We continue to see demand for approximately 20 billion in total server CPUs. And based on our customer demand and improving supply outlook, our preliminary expectation is for CPU revenue to more than double in fiscal 28, positioning us as one of the world's leading server CPU suppliers. Since the announcement of our Groq partnership last year, we've been working to unite NVIDIA's high throughput and Groq's high interactivity architectures. At Hot Chips earlier this week, we announced that Groq 3 LPX, our first rack-scale LPU system, is in full production and already setting records, demonstrating nearly 4x the number of tokens per second against the next best alternative on our artificial analysis benchmark. We expect to ship Groq 3 LPX in volume later this quarter to early adopters. Nebius will be the first.
Oh,
Today,
oh,
we're
there you
not
go.
just selling the best
There you
chips,
go.
we're selling a full stack AI factory platform, offering superior economics for customers and capturing a bigger share of the data center TAM. Our third unique capability is the combination of our full
There's no
stack
way, man.
AI factory
That's
and rich CUDA
this is wild.
ecosystem, allowing
right.
us to extend AI into markets a
Oh
single
my
chip
God.
alone can never reach. Beyond the hyperscalers lies a massive market anxious to adopt AI. Customers with
This
no
has to
interest
be
in designing their own
manipulation.
custom silicon. NVIDIA's
Yeah, I don't know.
fully
We'll see.
proven full stack platform is uniquely suited to help sovereigns, neoclouds, and enterprises build their AI infrastructure, bring it to full operation, continuously optimize it through CUDA software, and connect it to offtake demand from our vast developer ecosystem. Hyperscalers will
Nebius is
remain
going to
a
be the first
major
core
growth
weave for
driver,
training Groq models
but non-hyperscaler
on some of their
growth,
newer chips.
our AIC and E segment spanning sovereign, regional neoclouds, enterprise, edge, and air-gapped data centers will represent roughly half of our data center business. Our AI native startup ecosystem, developed and
Who's using
running
Groq? That's a
primarily
great
on the
question.
NVIDIA compute platform, is scaling at a rapid pace. Global VC funding in AI, roughly 70% of which is spent on compute, exceeded $400 billion in the first half of 2026, surpassing the $265 billion raised in all of 2025. Nearly 20 companies, including Cursor, owned by SpaceX, Figma, and Together AI, now exceed $1 billion in annualized run rate revenue, up from 13 companies in Q4 of last year, with vertical enterprise software logging the fastest growth. In enterprise, on a trailing 12-month basis, on-prem revenue in the automotive vertical reached $8 billion, while financial services, manufacturing, and healthcare combined contributed $7 billion in revenue.
So
Hudson
far, so
River
good,
Trading
Melvin. They
and
knocked it
Jane
out of the
Street
park
are
with
leveraging
earnings.
NVIDIA's powered AI factories to accelerate quantitative trading. Samsung Electronics is using NVIDIA Cullitho to achieve up to 20x greater performance in computational lithography, while Bristol Myers Squibb is investing in Vera Rubin AI Factory, a fast follow to the Roche and Lilly buildouts, as drug R&D timelines compress from years to months. In sovereign AI, our business, primarily through the regional neoclouds, grew 35% sequentially and more than tripled year over year in Q2. A country or region can allocate land and power directly to a regional cloud partner in ways it never would to a foreign hyperscaler. We don't own a cloud ourselves. We are a neutral partner to every sovereign and neo cloud. And because NVIDIA compute is productive, fungible, rentable, and durable, regional cloud interest is surging around the world. We helped CoreWeave, Nebius, and Nscale build entire infrastructure businesses, and neoclouds are emerging everywhere. Firebird in Armenia, Cassava Technologies across Africa, GMI Cloud in Taiwan, Yoda and NASA in India.
Surprised
Hermes
CoreWeave's not up
in
more.
Australia, YTL AI Cloud in Malaysia, pairing local land, power, and operating expertise with our platform. Last month, we announced a partnership with Noetra, Japan's national AI company, to build an NVIDIA DSX AI factory that will create open models to power AI agents, digital twins, robotics, and physical AI applications. South Korea's LG and Hyundai Motor Group are partnering
So much
with NVIDIA
AI.
to build and scale AI. And in Europe, a record 35 new NVIDIA
Yeah, how's the
powered
volume,
AI
guys? Let me
supercomputers
know if it
were
needs to be higher or
unveiled
lower.
to advance industry and scientific breakthroughs. Neoclouds are seeing strong demand pipelines from many diverse off-takers. Rather than allocating their entire capacity to a single long-term offtake guarantee that lenders typically require to finance a data center independently, we have introduced a revenue sharing structure. NVIDIA provides a take-or-pay commitment on a portion of the facility's capacity, a minimum revenue guarantee that gives lenders the confidence to underwrite the project, and in exchange, we share in a portion of the NeoCloud's revenue earned above that floor. Independent capital still underwrites
Interesting.
every deal on its own merits. We're not making
Minimum
loans.
revenue requirement.
In this model, we get paid twice, once on the hardware sale and again through the share of rental revenue, a highly reoccurring stream layered on top of a one-time equipment purchase. Over time, this model can expand our addressable market and create reoccurring usage-linked revenue stream alongside our core platform revenue, with the potential to drive billions in revenue over the medium to long term. Together, NVIDIA's three unique capabilities: a platform that runs every model,
Yeah, Jensen's
a
going to
full-stack
speak.
AI factory
He'll be on
platform
soon.
capturing more of the data center TAM, and a CUDA ecosystem that extends AI into markets no single chip could reach alone, reinforce one another, and are the engines of our growth. Let me update you on our progress with our Frontier AI Labs. The Frontier AI Labs have extraordinary demand for training and inference compute, but they are growing faster than what their balance sheets and credit profiles can support. They have rapidly growing customer demand, yet still lack the decades-long infrastructure contracts and investment-grade financing capacity needed to secure the AI factory infrastructure independently. In other words, their growth isn't limited by their technology or customer demand. It's limited by compute. For these companies, more compute means more intelligence, more users, and more revenue. NVIDIA is needed to help power this flywheel. First, we've invested nearly $50 billion in the Frontier AI Labs. This was a meaningful commitment, but it represented a small fraction of our expected free cash flow over the same period. Further, to support the Frontier Labs infrastructure buildouts, we recently announced partnerships with 6 of the world's leading infrastructure capital providers: Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR, to
Okay,
establish
this is the important
financing
part.
platforms that will raise over $500 billion of third-party capital. With these partnerships, building on our unique, fungible, and durable computing platform, the AI Labs will be able to build and assess AI infrastructure funded by long-term institutional capital at relatively attractive rates. Last week, we announced that we secured land power shell capacity through our partnership with SoftBank Energy to exclusively host NVIDIA Compute at their Portsmouth campus. The initial deployment, expected to support 4.25 gigawatts of AI factory capacity, will be utilized by OpenAI. Each generation of NVIDIA AI factory systems deployed at Portsmouth could represent approximately 1.5 million NVIDIA GPUs. And over 20 years, the site could support multiple upgrade cycles. Here's the essential economic point. The LPS commitment secures a long-lived AI factory site, while the NVIDIA compute within the data center can be upgraded repeatedly. This project deepens our long-standing partnership with OpenAI. OpenAI has committed to substantially deployments of NVIDIA AI.
OpenAI needs to start making money is what they need to do.
2030. OpenAI's existing and planned commitments represent approximately 12 gigawatts of NVIDIA compute. For another Frontier AI Lab, we will provide selective credit enhancement for nearly 2 gigawatts of compute. This complements the substantial NVIDIA compute capacity they've secured independently without NVIDIA's credit support. We recognize the scale of this support, and we know some will call this circular financing. We see it
because it
differently.
is.
We're going through a major computing platform
It is circular
shift,
financing.
the creation of one of the most important technologies in human history, and these are once-in-a-generation companies. Their technology leadership is proven, and their customer traction and usage are skyrocketing. We expect them to become the largest technology companies in history. We believe these investments, measured against the strength of their demand, the business they create for us, the ecosystem they build on NVIDIA's platform, and the equity returns on our invested capital, will be excellent. And our risk is limited.
Okay.
The NVIDIA compute platform is fungible and durable and can be redeployed to support other customers. For context, we expect demand from the AI labs, for which we expect
so we have
to
a
leverage
bailout
our
option
balance
if
sheet to
OpenAI
contribute
fails,
toward
is what she just
roughly
said.
a quarter of our business next year. This remains compute we ship will be consumed by investment grade customers or those that are backed by one. In Q2, we shipped less than 1% of our total data center revenue in Hopper 200 products to customers based in China in accordance with the US government licenses. Current Hopper shipments are dilutive to corporate gross margins. And given ongoing geopolitical uncertainty, there is no China data center compute revenue in our forward outlook. Moving to the rest of the P&L, GAAP and non-GAAP gross margins were both 75%, largely unchanged from last quarter due to a similar product mix. GAAP and non-GAAP operating expenses were up 10% and 11% sequentially, primarily due to high compute infrastructure costs and compensation and benefits costs. Our non-GAAP effective tax rate of 16% increased from a year ago, primarily due to higher revenue. On our balance sheet, inventory increased to $32 billion as we prepared for the Vera Rubin launch. Days of sales outstanding increased to 60 days, reflecting extended payment terms for large purchases by certain investment-grade customers to be shipped over multiple quarters. In Q2, we returned a record
ideal for
26
cash.
billion to shareholders, 20 billion through share repurchases, and 6 billion through our quarterly dividend of 25 cents per share. Relative to our plan to return 50% or more of free cash flow, we have returned 60% on a year-to-date basis. And going forward, we intend to increase and return excess free cash flow net of strategic uses. Let me turn to the outlook for the third quarter. Total
Okay,
revenue
here
is
we go.
expected to be 108 billion, plus and minus 2%. We expect sequential growth to be driven primarily by ACI&E with data center, while growth in hyperscale is expected to re-accelerate in Q4 and into fiscal year 28 as supply of Vera Rubin grows over time. We see Vera Rubin accounting for about 20% of data center revenue in Q3. Looking ahead, our preliminary expectation is for fiscal year 28 revenue to grow approximately 70% year over year. Although we will work to close the supply-demand gap, we expect supply to remain a bottleneck at least through the end of fiscal year 28.
Through
Many of you have
28,
expressed
next year.
concerns regarding our gross margins as component
That's
costs
insane.
have risen significantly. As you are already aware, we are experiencing extreme pricing conditions in memory. The magnitude of the price increase has exceeded our prior expectations and are headed even higher into next year. As a result, we are resetting expectations today. For Q3, we expect GAAP and non-GAAP gross margins to be 74%, plus or minus 50 basis points. We expect margins to bottom in Q4 in the 71 to 72% range, before settling at 72 to 73% in fiscal year 28, as executed price increases take effect in Q1.
There we go.
We want to be direct about this rather than let it linger as an open question. Memory scarcity today is being driven in large part by the AI build-out itself, and unlike a component that simply raises our cost with no offset benefit, tighter memory supply is a symptom of the same demand surge that's driving our own growth. We have a long-standing, deep relationships with all three major memory suppliers, and we're working closely with them to further increase the capacity our roadmap requires. GAAP and non-GAAP operating expenses are expected to be approximately 9.2 billion and 9.0 billion, respectively. For the full year, we now expect OpEx to grow in the low 50s, driven by a broadening of our product portfolio and further increase in the usage of AI tools, which is already and will continue to enhance engineering productivity. For full year, fiscal year 27, we continue to expect GAAP and non-GAAP tax rates to be between 16 and 18%, excluding any discrete items and material changes to our tax environment. With that, we will now transition to Q&A. Operator, please poll for questions.
Very
At this
bullish
time,
guidance.
I would like to remind everyone,
Very bullish.
in order to ask a question, press star, then the number 1 on your
Dylan, it's
telephone
80%
keypad.
growth for
We'll pause for just
fiscal
a
year
moment to
28.
compile the
Insane
Q&A
revenue
roster.
and earnings growth.
Your first question comes from the line of Joseph Moore with Morgan Stanley. Your line is open.
Great, thank you. I wonder if you could give us color on the 70%, and what gives you the confidence to guide a full year out? You haven't been doing that. And then what's the gap between that amount of growth and the 100% demand growth? What is the kind of key constraint that separates those numbers, and could you close those gaps over time?
Yeah, thanks, Joe. As you probably are aware, AI has become useful, and the AI agents that are being adopted everywhere use an enormous amount of compute. first of all, the large language models are larger than ever because they're smarter than ever, and these agents
Yeah, this
go
is Jensen.
through reasoning and planning, multiple turns of tool use. The amount of compute necessary for an agent versus a human using it is probably 15 to 100 times, depending on the type of problem you're trying to solve. And so the amount of compute necessary is just extraordinary. That's a factor that almost everybody sees. The part that people don't see about our growth, because we're practically singular because of the nature of how we deliver products. I mean, we're the only company in the world that creates and builds, offers an entire AI factory platform, a full stack system. And, customers can still mix and match. However, most companies just don't have the skills to do that or desire to do that. And so there's an entire part of the market that we experience growth. There's sovereign AI, the regional AIs, their neo clouds, their AI startups, their enterprises, where we're seeing, which represents about half of our business, and that's growing 100% a year. That part of the world's computing is likely to be larger over time than even what we're currently experiencing in the cloud. And so, so I think the demand that we see is driven by all of those factors. It is also the case that you can no longer procure technology per se and stand up these infrastructure. You've got to go secure the land, power, and shell, which oftentimes is a couple, 2-3 years out. All of the rest of the supply chain necessary to align the construction, the power, the cooling, all of the labor that's necessary. And AI infrastructure is creating so many jobs all over the United States and all around the world. It just takes a lot more planning. And so we're involved in securing infrastructure now, further down the pipeline. Just as a long time ago, people asked me, why is it that we're working with memory suppliers when we're a chip company? And today people understand it's really quite genius that we were working on our supply chain so far upstream. We work with power generator companies. We downstream. We work with land, power, and shell companies all around the world, and that helps prepare all of this computing that's going to be built that will ultimately deploy for our ecosystem and our customers. And so we just have a lot greater visibility now upstream and downstream. It is the case that we've never forecasted or never guided.
Here's Vistra right here. One of the construction companies involved, for those of you who are wondering.
Even though our demand is much greater than 70%, our supply allows us to confidently deliver 70%. And we're going to continue to work with our supply chain to increase on that. But what we wanted to do is to be consistent with everybody, from our customers, our shareholders, our supply chain. Everybody sees the same view. And the reason why that's important is because, everybody's putting a lot of resources at play. And so we wanted to make sure that everybody has the same set of information.
Let me know if you can hear it okay.
And we've got a huge year coming up next year. And it's going to be pretty extraordinary.
Your next question comes from the line of CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. There's tremendous investor focus on your inference market share. Can you speak to the evolving workloads you're seeing with agentic AI and how you see your share evolving year over time, particularly when you reflect on the growing value of the TAM you're seeing with each new full stack generation, your expectation for greater growth from ACIE, and then also including Grok 3 LPX? We'd love to hear your thoughts.
Yeah, thanks, CJ. The AI lifecycle is getting way more complex than it used to be, and it's playing into NVIDIA's architecture much more greatly than it used to be. And so you could kind of see it as 4 phases. There's the first phase, which is preparing all of the data that you need. Some of it is synthetic, some of it is real, some of it is human labor and human labeled and generated. Pre-train the models, and then there's post-training, the third phase, and then there's the agentic inference. And agentic inference is
Guys, the sound is almost all the
complicated.
way up.
And so every one of those phases are complicated. The thing that's really great about the NVIDIA architecture, and we created this with NVLink 72. It was a big surprise on the world when we first created the world's first rack scale architecture. It was it was hardly easy, and it was very challenging building the first generation. We're now in our third generation of NVLink 72 rack scale systems. We had to reinvent the entire supply chain, reinvent systems, reinvent the technology, redistribute our software, refactor our software. Everything, every aspect of it was hard. But what it allowed us to do was to create one fungible system that allows us to transition from data creation, data preparation, to pre-training, to post-training, to agentic inference. The benefits to customers is incredible. And the reason for that is because you've just spent, and we just mentioned, each gigawatt of technology and NVIDIA's revenue exposure in the Hopper timeframe with Hopper plus InfiniBand, and now Vera Rubin and CPU, and 3 types of different networking, because it takes that many types of networking to address the entire world's data center, not to mention the scale in security networking and the scale across multi-campus networking. So you could argue 5 different types of networking systems. And then of course, Groq. And all of that increased our revenue contribution or revenue opportunity per gigawatt to $40 billion. So each gigawatt of data center increased from, say, $30 billion about 5 years ago to now $60 billion today. Of course, the productivity is tremendous. The performance is incredible in comparison, but you're talking about a $60 billion investment. And to the extent that you could use it across multiple phases.
It's very bullish, Bryson.
Of the AI
Guidance
lifecycle.
was very bullish.
Run every single type of model.
80% revenue growth for next year.
Whether it's diffusion or autoregressive or state space or some hybrid version of that, every version of attention mechanism you can think of, small or large models, the investment that you make will be preserved and useful and productive for a lot longer time. And so I think our advantage in this new world is really quite extraordinary. And it could explain, why it is that our growth is actually accelerating. It was already large, but now it's accelerating. Let's see, you asked about Groq. I was super excited about Groq 3. We achieved a record token interactivity rate, extremely low latency performance generation. The team is doing fantastically. We spent the last several months fusing the NVLink architecture, which will be the core, and it'll be the core engine. And then for services that would like to have super high interactivity, super high speed token generation done, the throughput is going to be a lot lower. The cost per token will be higher, but you could associate it with high ASP services. And so for those companies, you could bolt on one of our Groq accelerators. I'm super excited about that. But the vast majority of the world's data centers will just be Vera Rubin NVLink 72.
God, he likes to hear himself talk.
Your next
That's such a
question
long
comes
answer.
from the line of Stacy Rasgon with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. So the 70% growth in fiscal 28, which I guess is sort of calendar 27, so that's something like, a $200 billion uptick versus the prior outlook. If I back it out, the prior outlook was $1 trillion over the 3 years. So this is probably 200 billion more. I was just wondering if you could talk us through the contributors to that increase across the different products, Avira and CPUs and Groq and everything else. And also, you talked about your price increase that takes effect in Q1. So I assume some of this is pricing. And I guess I'm also curious, maybe I'm squeezing too many questions in here, but I'm also curious, just it's a constrained number. What would it be if it wasn't constrained?
Who cares? What?
The unconstrained would be a lot higher.
Yeah. What? Come on. What a dumb question.
We grew 100% year over year this year. The unconstrained, is significant. And so we're just going to have to go work hard to get more capacity. And And, you know, we have a large supply chain.
That was actually
We
a
have a
stupid
really
question.
gigantic supply chain. And so we have incredible partners. And we've secured a lot of supply, but we just need a lot more. To break it down, the way to think about that is most people see just hyperscalers. And that's half of the picture. The other half of the picture is what we call AC, and that's all the enterprise, the neo clouds, the sovereign AIs. You know, that part of the world is invisible to everybody. And the reason for that is because
It's definitely not.
they don't buy custom chips. They don't buy chips one at a time. They really need an entire factory platform built for them. And so that's a space that we add just a tremendous amount of value. Now, of course, back in this hyperscale space, that's growing incredibly too, right? You know that they now have backlogs of $2 trillion. You know that when they stand up NVIDIA Compute, when that happens, their revenues go up, their earnings contribution go up. Compute is profitable, very profitable today. And compute directly
adjusted
translates
EPS does
into
not
increased
go up.
revenues. And so there's just a race to want to bring more NVIDIA Compute online, both at the hyperscalers, but what you don't see is just really tremendous opportunities outside of the hyperscalers. But the other part of it is, and it's the reason why, you know, we mapped it out for you. In the case of Hopper, we were at about 18 billion per gigawatt. For Grace Blackwell, we're about 25 billion per gigawatt. And for Vera Rubin, it's about 40 billion per
40 billion per gigawatt. We heard that.
And the productivity is, you know, X factors increase in each generation. And so customers want to race to the next generation as fast as they can. Meanwhile, because NVIDIA's compute is so productive, the tokens they're generating, the GPU hours they're renting out is insanely profitable, as you know. Their margins are fantastic. And so all of that is just simultaneously happening. I think the big picture is that we're going through this platform shift, and it affects every computer company. And every industry in the world uses computers. So therefore, every industry is affected. Every company is affected. And this new way of doing computing is intelligent. It's not based on retrieval of files, but it's now generating intelligence. And that requires compute. But the results you get is phenomenal. The results you get is tremendously better. And so, you know, we're just seeing that across the world. Everybody wants to be part of the AI revolution. Everybody will have to be part of this computing shift, and everybody has to build infrastructure.
Yep.
Your next question comes from the line of Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question, and thanks for providing all the transparency and all the commitments and guarantees that you have for a number of years. When I just, you know, add up everything that's in the CFO commentary, I get to a number of about 500 billion or so, obviously over the next several years. So I had a few questions related to that. First is that the takeaway, that the sum of all your ecosystem investments over the next several years is in that ballpark, or are there other equity or other investments that could still be ahead? That's one. Secondly, if there is a specific cash, part of that that we should think about in fiscal 28. And then, Jensen, a lot of these investments are, designed to help the frontier labs, especially OpenAI and Anthropic. But both of them are designing their own custom chips. In fact, OpenAI just, in the last few days spoke about
Good point.
Jalapeno and their claims about being better than Blackwell and so forth. So how are you balancing this dynamic where you want to invest a lot in the ecosystem, but part of that ecosystem wants to develop competitive solutions?
Time to shit
Thank
on
you.
Sam Altman.
Well, we're building something very different. Whereas many of these XPUs are inference-specific chips for one cloud or one service, NVIDIA is a platform, an entire AI factory platform that spans the entire AI lifecycle that you can use in any cloud. It's in every cloud. You can run anywhere will help you set it up anywhere. And so we built something very different.
He's choosing his words very carefully.
All of the AI services
He's taking a
at
lot
some
of time.
point are going to want to go around the world. And those data centers won't necessarily be just built by them. And also, I fully expect, and so they're going to run, and I think they're going to run on NVIDIA all around the world. And of course, I think our technology, I have 100% confidence that our technology will continue to be extraordinary for them. And that the economics of using our technology, whether it's from
Media
data
training
processing
kicking in.
to training, to post-training, to agentic processing, our technology is going to be extraordinary for them. They're going to use it. And so I have every confidence that they're going to be customers and partners of ours for a very long time.
I appreciate the analyst
taking a step
asking
backwards,
a blunt question, though.
investing in these two companies, or there are several AI labs that we've invested in, investing in these companies are once in a generation opportunity. I think the only regret that I have is that I didn't invest more and sooner. And two of the companies will likely go public soon, and others will follow. And these will be some of the most consequential technology companies in history. And so I'm delighted to be their friend. I'm delighted to partner with them. I'm delighted that they're building an ecosystem on top of the NVIDIA architecture. I'm delighted that they're counting on us to scale up. And I have 100% confidence that, through quite a long period of time, they're going to be utilizing NVIDIA compute for a lot of their computing. And so I feel great about it.
So Vivek, let me add a little bit more regarding the commitments and the portion within those commitments, which is our supply commitments. This is essential. This is essential for the raising of Vera Rubin today, as well as all next year. You can see that those commitments, the biggest parts of them are in the first 3 years, and we will use that to build the products that we need. This would also gives us the confidence in terms of our growth and revenue, given how much we have already aligned in commitment in terms of our supply, as well as capacity that we would need.
And nothing mentioning financial commitments to Frontier Labs.
Your next question comes from the
Particularly
line of
Anthropic and
Timothy
OpenAI.
Arcuri with UBS. Your line is open.
Someone asked
Hi,
about
thanks
this.
a lot. Jensen, I wanted to ask about open source. There's a lot of talk about that these models could gain share for workload in the US. You're obviously well positioned with Nemotron, but on the other hand, a lot of the end demand is being driven by these big frontier model companies. So there's a lot of investors that equate open models as being negative for the growth of those companies. So how do you sort of put and take that? Do you see the rise of open models as being good for NVIDIA or ultimately negative? Thanks.
The world will need both closed models and open models. And both closed models and open models are skyrocketing in use. I would say nearly all open models run on NVIDIA. And the reason for that is because NVIDIA's footprint around the world is the highest. And our architecture is the most fungible. It's everywhere.
The silence is loud. No shit.
And edge devices like DGX Spark, which is doing great, all the way to robots and workstations and your on-prem data centers. Open models are doing incredibly well. Closed models we know are doing incredibly well. The Frontier Labs, their sales are skyrocketing. Their margins are fantastic. They're generating profitable tokens. They're only limited by the amount of compute. That is equally true for open models. And our position in open models is very good, because the CUDA ecosystem is literally everywhere. The open models are also foundational to just about every
open
AI
models
startup
are meaning
and
open
every
source.
enterprise
That's what he's
company
meant.
around the world. It's vital to them. And the reason for that is because you should rent intelligence, strong intelligence, smart intelligence wherever you can, which is the reason why we rent it. And I encourage my employees to use the cloud services as much as they can. But every major company and surely every country and every startup needs to build their domain specific, their proprietary AI, their proprietary alpha. And the open models reaching frontier levels has made it possible, has enabled them to all do that. One of the areas where frontier models is vital is cybersecurity. You see the number of cybersecurity companies that are enabled by frontier models so that they could have distributed, massively distributed, continuously running autonomous cybersecurity systems to defend. Those companies are emerging. There's some amazing companies. They couldn't do it without open models. And so open models is both incredibly successful and has finally reached the frontier, but it's also vital to the American economy. It's vital to the world economy. It's vital to companies to build their own proprietary AI. You can't do it without one or the other. Both are going to be extraordinarily successful. And lastly, as you know, our market footprint of all AI models, I think we're the only platform, I'm fairly certain we're the only platform that runs every frontier model. And whether it's closed or open. Most of them were built on NVIDIA, and so they run great on NVIDIA. And so we're delighted by any model succeeding, so long as models succeed. I'm very happy. And both closed and open models are going to succeed, and they're both simultaneously driving our sales.
Your next question comes from the line of Ben Brightsis with Melius Research. Your line is open.
Yeah, hey, thanks. I wanted to ask you a question, Jensen, about demand in a different way. You talked about demand growing 100% next year, and I wanted to kind of get a sense for a couple things driving that and even beyond that. And there's two concepts here. There's recursive self-improvement, which apparently at Anthropic and OpenAI is going very well with AI that improves itself. And even OpenAI said they could hit AGI by the end of this year. And with the developments in RSI as well as AGI, what happens to industry demand? Does it inflect further? And what does it mean for NVIDIA when those things take place? And how are you looking at that as a demand catalyst? Thanks.
I appreciate
Good
that.
question.
It's going to inflect further. Today, the vast majority of AI is prompted by people. I believe that this last month it has crossed. Most AI are now agentic, but in the future, every company will have a whole bunch of agents. We have 40,000 employees roughly. In the future, we'll have 400,000 agents, 4 million agents, and those agents are running continuously. They're running in the background.
4 million agents at NVIDIA?
If you know anybody who builds edge, personal AI agents, and they run it on their like a DGX Spark, and I know a lot of people who run it on DGX stations. This incredible workstation that we've built, and you can buy it from Dell, and they're incredible. And these AI agents running on a DGX station runs 24/7 because you got stuff for it to do all the time. And so when the world goes to fully agentic systems, you're going to have agents running all the time, working with other agents running all the time, and those will be working in the background, improving your company, improving your lives. In a lot of ways, we're kind of recursive at this point. And you could argue it's coarse grained, but every time you run through an agent, it reflects on how it could do a better job next time, and it updates the skill file. And so the skills document, the markdown, is updated at the end of every single one of them. And so next time you run it, it's going to get better. It's a kind of a loosely coarse grained self-improvement. And so you see that all
I need an agent to help raise my credit score.
Always. And so in a lot of ways, and for many tasks,
need an agent to pay my mortgage. How about that?
Achieved AGI. I think all of those milestones and all those, they're kind of senseless at this point.
I need an agent to tell off my mother-in-law.
That that matters for the industry is that one, AI is now doing productive and useful work. Two, AI is generating profitable tokens. And three, if we had more compute, we could generate more profitable tokens, which results in more profit for all of the services. This is the exact phase where we're at, which is the reason why everybody's leaning in.
Need an agent to pay for
Your
my
next
wife's
question
boyfriend's
comes
new
from
car.
the line of Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon. Thank you for taking my question. If you think about the 100% growth you talked about in terms of the unconstrained demand growth, you're expecting the 70% you expect to fulfill in terms of supply. Can you maybe talk about some of the, or rank order, some of the most acute constraints, whether that be things like data center power and shell availability, DRAM, wafer foundry availability, et cetera? If you could maybe help us understand, which are the biggest among those, that would be very helpful. Thank you.
There's something funny I could say, but I'm going to just not. Last year, one of the funnest things to do is just to go figure out where I go for dinner and who I have dinner with. And their stock price doubles the next day. I think the answer is our entire supply chain is challenged, and it's everybody is really running flat out. And more capacity is coming online all the time, which is one of the advantages. What's going to happen this year? It's not going to come online in just an instance in time, but it's going to come online every day. Yields are going to get improved. We're going to be doing yield improvement. We're going to work hard on working with every one of our suppliers, and so it's not even next year yet. And so we've got lots and lots of time to work hard every day. And so at this moment, we have supply for 70%. We have more supply than 70%, but about 70%. Our demand is much higher than that. And we've got to go work hard, or, we're going to be
or
disappointing
AMD is going to take our market share.
And we like not to disappoint our customers, and we like to work hard for them. And so I'm going to need the help of the entire supply chain to help me out here. But they all know that. What I'm telling you about our needs for next year is exactly consistent with what I've told them. Everybody's on the exact same song sheet, and I'm trying to be as transparent as we can because we're talking about big numbers.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thanks for taking the question. I want to go back to the gigawatts, the 25 to 40, and maybe try and understand, I think, Jensen, you said at some recent conferences that, that's going to further scale. So, as we think about the path even beyond Vera Rubin, we think about Vera Rubin Ultra and so on and so forth. Should we really conceptualize 40 billion goes to 60 billion, 80 billion, and then, I guess, underneath
how
of
high
that
does it
question is
get?
how do we kind of think about your ability to scale the capacity deployments? Is it a linear function, or is there something that, kind of unlocks your ability to supply more demand as we look through fiscal 27?
Great question.
Or 28, sorry.
Yeah, great question. Great question. And very simple. Is our goal to put as much compute on a plot of land? Is our goal to put more compute into 1 gigawatt or less? And so obviously, we would like
more.
The speed of light answer. The perfect answer is actually infinity per gigawatt. And so if we could literally
Infinite
get $1 trillion of compute into 1 gigawatt and one piece of land power shell, it would be a fantastic outcome. And so the answer is directionally in that direction. We started in the world of general purpose computing during Moore's law. We were probably, pick your favorite number, but I'm going to go with
physics
like
out the window.
$3 billion per gigawatt of compute
to infinity and beyond.
With general purpose computing, and then eventually with Hopper it was 18. Now Grace Blackwell is 25. Next, Vera Rubin is 40. And after that, it's going to be higher. And that's excellent. That's fantastic for the industry. It's fantastic for customers. So long as the productivity of it continues to grow, the durability and the fungibility continues to grow, then people are happy to invest.
Fungibility is key.
Assets that generates revenues, generates profits, and helps them recoup their returns so incredibly fast. I mean, I heard the other day that return on investment capital is now less than a year. And we're talking about $50 billion data centers.
For who?
And so that tells you something about the productivity of NVIDIA's technology and the rentability of it.
For CoreWeave or Nebius?
I want to thank all of
know.
you for joining us today.
There are no further questions at this time. Toshiya Hari, I turn the call back over to you.
Thank you. Before we close, please note that Jensen will be participating in a keynote fireside chat at the Goldman Sachs Communacopia and Technology Conference in San Francisco on September 10th. He'll also be giving a keynote at GTC Berlin on October 21st. Our earnings call to discuss the results of our third quarter of fiscal 2027 is scheduled for November 17th. Thank you for joining us today. Operator, please close the call.
All right, guys. So that was the Q2 results for FY 2027 for NVIDIA. Pretty insane stuff. I mean, 70-80% earnings growth for FY 28 is kind of nuts. There was some acknowledgement of circular financing with OpenAI. They did not get into details about what the exact backstops are. They just said that there were supply guarantees with minimum revenue requirements on some of this stuff. What was especially hilarious is Jensen would love to see an infinite compute per gigawatt of power, which is kind of funny. Thoughts on Nebius now? We'll see. I mean, it's all about the economic viability of frontier labs and open models. OpenAI and Anthropic aren't making money yet, by the way. And I know a lot of people are like, well, can an AI agent improve my grades? Or can an AI agent pay my rent? Or can Jensen's plan of having 4 million AI agents with 40,000 employees at NVIDIA possibly continue to add productivity to things? We'll see. Pretty interesting stuff. Probably do a follow-up on all of this as well. But guys, I appreciate you so much for joining. I'll make a video on this on my TikTok channel, kind of going into details, giving my summary and analysis on all this stuff. But I appreciate everyone joining today. Had a ton of fun. I got to call it a day. So thank you so much for joining. This is probably going to be my last stream for a bit. My wife is about to have our second child, so I'm probably going to be gone for a little while, guys. But thanks so much for joining. Had a ton of fun talking with y'all. Again, I'll provide a whole video summarizing everything with NVIDIA's second quarter earnings, their guidance, their outlooks, my thoughts on it as well. Thank you so much, guys, for the congrats. Thank you. And for those of you who joined for the first time, thank you so much for joining. Make sure you hit the follow button. I'll try and go live tomorrow. I might have a little bit of time to go live tomorrow. But also, for those of you who are also curious about my deep dives and more detail into certain companies and doing investments and all that kind of stuff, check out my YouTube channel, because that's where I have deep dives and all that kind of stuff. And you'll get more detail on what I think certain companies are valued at. Maybe it's time to do an NVIDIA deep dive, because this is a critical point for them, where they've already seen incredible growth, but with agentic AI coming online and basically proliferating everywhere, what does that mean as far as accelerated growth in the future, and will we see that? So we'll see. Anyway, guys, thank you so much. It would be huge. YouTube, my YouTube is in the link in my bio, so go to my YouTube channel. It would be mean a ton to me if you guys went and hit subscribe there. It'd be super awesome. And yeah. Normally I'm live every day during the week, but we will be back probably tomorrow, maybe for a little bit, and yeah. So make sure you guys follow along. We'll continue to follow the story, and everyone have a great day. Everyone take care. We'll see y'all.